Welcome back, and joining me with more insight on the day's trade is Anthea Gardner from Cartisean Capital. Thank you so much for your time, Anthea. Let's start off with the Fed that kept interest rates on hold last night. Quite pleasing to see the reaction in the U.S. markets. Of course, that was expected, but I guess really what people were really looking out for, what would come out of the commentary from Fed Chair Jerome Powell. What tone did you get from him?
Sure, Zanati. So their concern really, because the Fed decided to keep rates on hold, all of them. And the idea that we got was because they're worried about, like our MPC, the tariffs, the uncertainty in the market, and global GDP growth. And so this is an interesting one because everyone's worried about it. And then the BOE cut interest rates by 25 basis points because they're worried about the impact that the tariffs would have on GDP growth. And so we were talking in our investment meeting this morning, and it was interesting. We spoke really about what would happen when these tariffs, if these tariffs kick in, because I see the US and UK have just announced a deal that they struck, so with no detail, but a deal nonetheless. And so we were saying, you know, possibly we could diverge from the US economy as emerging markets, because if the US imposes tariffs on China, and I'm using China as an example, and the Chinese goods that are sold to the consumer in the US are higher. That's inflationary for the US. If the goods are not, there are not as many goods bought, then China's sitting with warehouses full of produce, technology, things that they haven't sold to the US. And potentially what's going to happen is that they're going to what we call dump.
Yes.
And so dump in the sense that they will sell it to emerging markets or any other market for that matter, but cheaper, potentially even cheaper than production costs. So it could be deflationary for markets like ours. And then, of course, you think, well, if that's the case, what is our MPC going to do on the 29th of May, right? Because everyone's given them such a hard time saying that they've missed the opportunity to cut interest rates. They have to do it this time around. We think they're not going to cut on the 29th of May. We now think they're going to hold. So the Fed Fund futures are pricing in 3 full cuts by the end of 2025 in the US. Our market is pricing in 60 basis points of cuts. So the forward rate market is doing that for us. But we think there may only be 1 cut, and that would be in July, and they're going to go on hold in May, because even though they've got the perfect opportunity to cut, and let's be honest, our government needs all the help it can get with economic growth. And you saw those terrible manufacturing numbers come out today. We know that our MPC is hawkish. We know that Lesetja has been blowing, his horn about the tariffs and the uncertainty in the market and the volatility and unsure what's going to happen. And he thinks tariffs are going to be inflationary So it's interesting times indeed.
Very, very interesting times. And talking about interesting times, of course, the negative parts of it affecting some of the companies that we'll be talking about today. Let's actually start off there in the paper and packaging industry. SAPI, we saw that share in morning trade. I think it plunged by about more than 15%. Of course, this is after it came out with its second quarter results. Everything disappointing. The company was even saying that they underperformed their own expectations. Top line flat, major slump on the bottom line, debt increasing. What was your reading of those numbers?
Full set of numbers. I mean, to go from a $29 million profit in the previous second quarter to a $20 million loss in the comparative quarter is spectacular almost, and something's bothering me about this. And I need to look into this company's financials and what they're saying and processes more carefully, because so the debt levels are extraordinary, right? And then they keep saying, well, the excuses, I should say, that they're using is that US imports most of the clothing is a problem. China's not buying textiles and clothing. And this DWP is used in what they called lyocell and viscose to produce this product, to produce textiles. And so textile, and that makes up 20%, fair enough, of the group's sales. But still, they're saying it's because China's not buying because of tariffs and everyone's waiting in the tension. And they've had headwinds in the macroeconomic area. Um, so, and then like they're trying to make us believe that the bad news is in the price. They're busy restructuring and de-gearing. But to move from into such a huge loss, it's concerning.
Yeah. And you know what? This is actually not the first time, because a lot of people have been cautious about SAPI, particularly when I speak to the analysts on Stockwatch, because it's such a volatile stock. But actually looking at Mondi, it was actually quite interesting, because I think in the last year, SAPI was maybe outperforming Mondi. But actually today, we saw Mondi's share price climbing a little bit by about 3%, because they also took out a Q1 trading update. And I'm wondering if maybe things look more comfortable there at Mondi, as much as they're also talking about macroeconomic headwinds.
Yeah, exactly. So they've got the same story, right? Global trade tensions, macroeconomic uncertainty. I mean, they've had higher sales volumes, they said, good cost controls, but also fewer planned maintenance shuts in the first quarter. And that's helped them offset the lower selling price compared to the fourth quarter. So it's just a completely different story, actually. And I'm looking forward to seeing what their results will show. You know, this is a company, remember when the Ukraine-Russia war started and they were closing down their mills in Russia and everything was a drama and they're trying to sell out, and suddenly it feels like a different company.
Indeed.
Let's see what happens when they put out their results.
All right. Well, let's go into Naspers process. There was a letter from the CEO basically giving us a business update on the e-commerce business outside of Tencent, seeming to be doing well. Your thoughts on the contents of that?
I think you're playing it down a bit, doing well. I think these numbers are staggering. You know, there's a lot of talk about them overpaying for Just Eats, but their iFood delivery business delivered more than 120 million orders in March, and they continue to expand. You know, the OLX is now the biggest, I think it is the largest classified company globally, and they still grew revenue by 20%, and they're still saying that they've got significant margin expansion, room for, those are the words they use, room for significant margin expansion. And then their subscription business, Kloof, was delivering 40 million orders. Like, these numbers are just crazy. And so you think, at what stage does this company plateau or become a mature company? Because the growth is just exceptional. I mean, I think that EBIT number was surprising even to them.
You know what, Anthea, it's quite interesting because, I mean, you're right. It was absolutely spectacular what they produced, but it's quite interesting that I think just 2 years ago, there was a lot of concern about that e-commerce business and when it would reach break-even and profitability, and it really just seems to be firing on all cylinders. Well, let's get on to AB InBev before we go into your stock pick. First quarter results, I think all the financial metrics were up except for volumes, but also outperforming expectations. How did you digest those numbers?
But exactly, another fantastic story, right? So profit was up $1.6 billion, EPS rose by 7%, and that's despite volumes down over 2%. This is such a great story of what we call the narrowing of jaws in the industry, where they have managed to increase profit by limiting costs and increasing the pricing points. And it's so interesting to see the trends, actually. That's the part I really enjoy, actually, about reading these results. Like in China, the beer industry has been negatively impacted because, well, the consumer's under pressure. So volumes have underperformed just generally the industry, and customers in China have been deciding to drink at home. So what AB InBev did was they invested in at-home sales. In Mexico, the real growth has been in the non-alcoholic beers. And you think, Mexico, really?
Right.
Especially the Corona syrup, that they call it. So such a great story. And of course, their B2B platform is paying off very well.
Yeah, it's really, really amazing to see kind of a consumer demand and shifts in taste through numbers of consumer companies like AB InBev. Well, let us get to your stock pick for today. What are you choosing?
Donati, you know I'm very conservative generally, but today I'm going for quite a speculative trade. And I hope Stefano Marani is not listening, because I'm not sure he would like me to call it a speculative trade. But I think Renergen's got some upside coming. You know, they've had some real issues in the past, but recently they've won quite a few legal battles. Their key assets, LNG and helium, in fact, their helium reserves make them one of the most valuable producers in the world. And then you compound that by the demand for global sustainable energy products, and suddenly they're sitting in the pound seat, so to speak. I should say the dollar seat, actually, because they're looking to list on the Nasdaq. They do need to raise some capital, and they do need to complete their phase one, I think they called it, or something like phase one production. But I do think it's a share that it's 6 rand something at the moment. I think it's a share that could probably easily go to 20.
All right. Well, thank you so much. And good news for me, because I do own some Renergen in my little portfolio. So hopefully I can also start to see some upside there. Really appreciate your time and your insights there, Anthea. That was Anthea Gardner from Cartisean Capital.